Good day, traders. Richard Jacobs here, and welcome to the Underdog Weekly Perspectives Report, where we reflect on some of the trading action over the past week and also form some views and perspectives on what we think the market's going to be doing over the coming days and weeks. Now, to kick off, up on your screen, what you have is a daily chart of the top 40. And as you can see over here, and following on last week's analysis, what we had was the market looking to consolidate over here, but it really didn't come back very much. There was a shallow retracement happening over here, and it really chopped along sideways before moving into the beginning of last week. We started to see the market push to the upside and continue to the upside again. And over the course of the week, we saw the market push through that 50,000 level that we'd been eyeballing and put in a higher high and a higher weekly close as well. So we remain on this uptrend over here, pushing to the upside. Markets putting in all-time highs. What we are seeing at the moment, though, is we have an overbought stochastic. And what's worth noting is there's a very faint hint of negative divergence playing out or manifesting over there. Negative divergence in the sense that we have the stochastic putting in a lower high, while price looks to be, if it does come down without putting in a new fresh highs over here, it does look to be potentially putting in a higher high over there. So that the existence of the negative divergence, this does add to the case for the potential for this market to start pushing to the downside over here. But again, that as I've stressed over the past few weeks, that is a counter trend move. What we would be waiting for, well, it would be counter trend in any case, but that move would only be confirmed once we see a few lower lows and lower closes playing out in the coming week. Whether or not we're going to see that, that's what we need to be keeping an eye on. At the time of this recording, it's about 6 a.m. on Monday, the 28th of August. The market, the out-of-market action seems to suggest that we're going to see a weaker open, around about 150 points at the moment. To the downside is where the market's looking to open. So perhaps we do see the start of that negative divergence playing out. But again, we'll keep an eye on that. And as I said, the trend remains strong and to the upside. So even if we do see it playing out, bear in mind that that would be considered a retracement within a bullish trend. We're coming to the end of August, and one of the things we've been highlighting over the past couple of months or weeks is really the fact that when the international markets, the US markets, as people come back from the mid-year breaks, we would like to see that volatility ticks up or starts to tick up as we head into September and beyond. At the moment, we've got a bit of a trend of volatility dropping off over here. Hasn't revisited these lows over here around about the end of the first week of August. So hopefully we start to see some opening up of the markets over here, which is, as you know, that is what we need for us to take maximum advantage of trend trading and trend following opportunities. We still significantly off the levels that we'd ideally want to be at, around about here. But even a small uptick in volatility does help us on our intraday trading systems specifically. So that's what we're seeing in terms of the price structure and the volatility on the daily charts. We switch over to the international charts. Have a look at what's happening over there. The daily chart of gold over here. You'll see that gold's really just trading inside this range over here. Right there, around about those levels, bouncing off the tops and the bottoms of this range. At the moment, it's pushing up, but it's still really just tapping around the top of this range. You will notice here we haven't drawn any price structure in the last 1, 2, 3, 4, 5, 6, including today, 6 days, which is indicative of some sideways choppy action over here. Now, equity bulls would really want to see this, the bounce off the top of the range over here, potential for risk on in the equity markets as gold comes off. so that the equity markets could push to the upside, whereas bears would prefer to see gold continue to push and break structure to the upside of a year. So this is something that we do need to keep an eye on in the coming days to see which way, if the negative divergence on the top 40 starts to play out and we see a significant retracement starting to manifest, then we'd expect the gold price to pop to the upside and break through this $1,300 level. So that's certainly something we need to keep an eye on. If we look over at the S&P in the US, see what's happening over there. Nothing much. I mean, we'd highlighted this moves up to the strong trend that's in place, higher highs, higher closes, higher lows, printing over here on the daily, and then we get this complex retracement as it pulls back into this previous price structure over here. But we're not seeing this continuation move to the upside play out yet. Instead, again, the market, we haven't drawn any price structure in the last 1, 2, 3, 4, 5, 6 days, including today. So the market's really struggling to get that last push or that push off this level over here to the upside. And so it's consolidating, it's chopping sideways at the moment and not really giving us much in terms of directional bias. I mean, the trend is to the upside, but certainly if it chops to the sideways over here and then starts to roll to the downside, then we'll be looking at around about the 2400, 2410 level, and a break of structure over there would be quite bearish. If we have a look at what's happening in Germany, the DAX. We've got a bearish trend in play on the DAX. We're putting in lower lows and lower highs, but again, sideways choppy action. We get this last continuation move to the downside over here in the direction of the trend, but the market hasn't followed through on it yet. Instead, it's just chopped sideways here for the last week or so. So in the case of the DAX, we've got bearish price structure, but also struggling to follow through to the downside over here. We need to see this market push through that 12,000 level again to continue that move to the downside. The UK, the FTSE. I made this point several times. One of the messier price charts. After that, nice push up from the end of April all the way up here into this impulse leg. This entire period for the past 2 months. Past 3 months nearly, has just been consolidation, sideways consolidation. We got this retracement, continuation, move to the upside, no follow through. Market pulls back, finds support again at that previous swing low, pushes off that, comes back, retests that level again at around about 7300, also pushes off it again. So we've tested level 1, after that break of structure 1, 2, 3 times now. If we do see that level, if we do see another retest of that level and a potential, and it starts to push down, that would be quite bearish in my opinion. But at the moment, it does remain bullish, but it's quite a messy bullish structure that we have in play over here on the FTSE. The Hang Seng. What we're seeing on the Hang Seng is we're finally seeing that follow through to the upside over here. So actually very similar to our top 40. Shallow retracement and now that continuation move to the upside. So it keeps that bullish trend well intact. This is a very strong market. It's been a strong market for most of the year. It's pushed up significantly over the course of the year. If you look at where it started out, let's just get the exact levels. We had an open at 21,943. It's sitting at 27,992, just shy of 28,000 at the moment. This has been a very, very strong market, and it continues to look strong as it pushes to the upside over here. So pretty much nothing much to read over here. It does look like another leg to the upside, potentially on the cards. And finally, let's look at the currency, Rand dollar. Another choppy looking affair on the daily. Bullish trend in place, a weakening trend in place, but again, no follow through. No real follow through over the past few weeks to the upside or in the direction of the weakening trend. Instead, we had the Rand actually start to strengthen over here all the way back down. And so if we see a move probably below those levels, around about 1280. That would open the door for further potential rand strengthening, but at the moment it's just it's just consolidating in this bullish bullish trend, bullish in the sense of weakening trend that's currently in play. So that's pretty much it from our side in terms of what we're seeing on the markets at the moment. As you can see, quite a few mixed signals. Lots of markets in consolidation. For the most part, you've got markets trending to the upside, which is not not surprising, given the trend that we that's reflected in our own market as well. But certainly, there's evidence of consolidations playing out, and the potential for retracements to start manifesting in the international markets, and potentially in our local market as well, given some of what we've discussed earlier. So over the next week or so, I think what we're gonna eyeball is really the extent to which the market can follow through. It might be worth drilling down to lower time frames to see potential, or to identify potential structure breaks early, downside structure breaks early, because that could give you early indications of where we're going to start to see retracements playing out. And I reckon that'll probably be the theme for the next week, is not so much is the market going to start to break to the downside or retrace to the downside, but when is that going to happen? It's not a case of trying to preempt that move. It's in a sense what we think is going to be happening, but again, what we want to do is we want to make sure that we see that happening before we prematurely try and get involved in trades, for example, to the downside. And again, bear in mind that even at this stage, even if we do see those trades confirming, or those setups confirming, or that price structure confirming to the downside, those are going to be counter trend trades within the broader uptrend that's currently in play. So guys, that's pretty much it from our side. All the best for the remaining week of the month ahead, and I hope your trades all prove to be profitable. Cheers.